I have an extra in the car.
I saw something the other day where they had like a nasal, instead of a shot, and I was like, I mean,
Not Narcan, right?
no, well, it kind of reminds you of that, but it was instead of a big shot it's kind of like intimidating to do the. We are live. Okay. Tim Arrowood here. We're not going to talk about mortgages today. We're going to talk about anything else but mortgages because that's much more fun. So good. Well, I haven't been here in a minute, and we're a week later than we usually are. So we're usually Labor Day, which is like, what day's Labor Day on? Monday. What's my birthday? Saturday. Labor Day's Monday. So just so you know.
When was your birthday?
The 6th, September 6th.
Okay.
Yeah. Yeah. Oh, no, I was born on Labor Day, but it was on a different day when I was born. So my mother says, yeah. So anyway, she knows because she was there. Yeah, I know it. Well, it actually worked out that way.
It's
So
the first Monday of every state.
that's right. So it happened to be evidently in 1968, September 6th was on a Monday. So little trivia. Yeah. So what is going on? What's going on in the market? Well, Mr. McCrory, what's going on in the market? You've been out of town. I got a story about you. I got a story about you, but I'll tell you later. Well, we're not being recorded. Not that I'm afraid of talking about things that are inappropriate on video, so that Karen can't actually post them. So.
Oh, it's been picking up. I feel like right now I've seen that the mortgage applications have increased this month.
Yeah.
The highest since this year. The interest rates trending down, more people coming in, but we do have my higher listings are just, if they're not super choice and stand out from the rest, that's it.
100%.
Cool.
I think my Ridges one has been on the market for 160 days, and today we might get an offer. We had
You know, it's interesting. I was listening to, I don't know if you ever listened to Brian Buffini, a real estate coach, and he does two podcasts a year. They're called Bold Predictions, and so he talks about what he thinks can happen in the market and what's going to happen. So I was listening to one on the way here, and he kept going back to, 2019 was normal, and everything since then has been abnormal. And he talks about days on the market, and is the buyer's market and all that stuff. And it's like he kept going and comparing 2019 to 2025 and what we're in, and he's like, it's pretty much like it was in 2019. You got to be a better salesperson. You got to be a better follow-up. You got to do all those different things. But there's so many people. And when did you get into real estate? 2019. Okay, so you got in about that time, and then you got in later than that, right? Yeah. And you got in later than that. Now you've been around forever, but doesn't really count. So, I can't help myself picking on Dustin. So Will, how about you? So you've been in the business for a couple of years, right? 32 wonderful years. Yeah. I have socks that old. So do you agree that I mean, if you were to anecdotally compare what the market looks like right now to maybe what it was in 2019, I mean,
It's moving very similar.
You think so?
But the problem is the pricing's changed.
Yeah.
The level of which people are willing to take that risk and take the chance of actually buying a house is kind of different.
Okay. Do you agree with that, Will?
I'm a summer house.
Okay. Oh, yeah, I forget that you all can't hear what we're talking about. So there's what I'm hearing is a lot of similarities to 2019, but there's some differences in that because interest rates and perhaps uncertainty in the job market and different things like that is another layer of concern.
Nobody was worried about where rates were because they're pretty steady. Now it's like people are like, oh, are they going to drop or are they going to go back up? When's our chance?
Right. Okay, that makes sense.
Affordability being challenged over and over. We saw it first getting pushed in 2022. Came here, so we're talking about 2018 market. Johnson City was 185,
Mm-hmm.
average, and then now I think we're like 335, 340 or something like that. Like for a decent house, even for first time home buyer, you're pushing into the threes.
Oh yeah.
100%.
Yeah.
We used to be able to put people in like a nice house, not a nice house, but a decent house for like $200,000.
Mm-hmm. Yeah. 100, 150. Oh yeah. Yeah.
And now it's like 150 is basically a free house.
Yeah. Well, I see that all the time. People come in there. I said the math is easy. I can pre-qualify you for 150. The hard part is, that's going to be Matt's. That's going to be your challenge to help trying to find them something. So it's like, I'm sorry. Yeah, exactly. Yeah. I mean, in the house that was, the $60,000 house from 5 years ago is the $150,000 house now. I don't know. That's probably not exactly right, but
Our local economy hasn't really.
yeah.
The local job market hasn't caught up to it. It's
Right.
up a little bit, but the discrepancy in actual affordability is challenged more. So people are having to use more of their income to pay for
Yeah.
housing.
Yeah, absolutely. I've actually seen just this year, my average loan amount last few years has been about 225,000. This year, I'm at like 350.
Wow.
And so I think there's a combination of things going on. One is, well, when I first started 14, 15 years ago, my average loan was like 110, right? Because number one, I was new, and I was desperate. I would take anything, right? So you want to do some crazy loan, and I'll help you through it, and small loan amounts and all that stuff. I remember in a coaching call that I'm dealing with people that are in California, like I did 6 loans for their one. I'm like the amount of effort, and they're like, oh, I wouldn't touch that. I'm like, all right, well, good. I'd starve on the $600,000 loans that I would be doing if I waited, right? So, but that was a surprise to me that well, the other part I think is because I'd say a good 40% of my business now is repeat business. And so the people that I helped, now they're selling and buying, and now they're more mature and they're buying higher, and there's probably a point where that will turn, where they'll start to downsize. But that's kind of interesting. So
Tim, you seem like you're the king of repeat business, which is a good thing.
yeah, it has been. I mean, I work at it, right? I mean, we call our past client database, we mail, we do different things, and it just amazes me that people have businesses that don't focus on that. It's just people that are one and done. To get new business every time is so hard. So
Can you speak to like the people you're talking about in California?
Uh-huh.
And there was all the fires and like in the LA area, wherever that was. But like what Matt was saying too about the economy, it's still like, and is a lot of that from the flooding that the economy, and like how much does those kinds of things affect the economy? Affect the economy and people buying and selling.
So the question was, let me make sure I get it. So how are the fires and floods and things like that, how are they affecting our market and buying and selling? I'm trying to think. I mean, there. I mean, like I think about. I don't know. I just don't have any context with the California stuff, right? And a lot of those. There's still people moving here from out of state.
California folks coming? You still have them
A fair amount. People. The majority of the people that I see moving in from out of state aren't moving. They're moving for either political reasons or they got grandkids. That's what I'm seeing. It's like I want to be near the family. I want to do this. I want to do that. I've got a couple that are up in Vermont that they just randomly decided they wanted to move to Bristol.
I was hearing say is there still a lot of people from the north?
Yeah. Yeah, it's
That's more discoverable. We've had one now. I'm selling her place. She moved down, bought with the team like a year and a half ago, and was like, "I'm not ready for this culture."
right.
Not SoCal.
Yeah.
Back home type
Yeah.
Okay, which is true.
Yeah.
Like it's not. If you're coming here and you're expecting a similar frequency or energy that is Southern California,
Yeah.
this is not Southern
Yeah.
California.
Absolutely not.
Well, that's what Buffini was talking about. Is people talking about, well, Florida market is hit pretty hard. Well, the people from New York moved to Florida, and they're like, well, who knew that there were hurricanes in Florida? It's like, well, they've been going on for quite a while. So it's nothing new. It's like somebody. A friend of mine was selling his house. He had about 5 acres, and this was during the heat of everything, and so he gets it under contract, and the guy, sight unseen, the guy comes and looks at it and he says, "Oh, there's too much grass to mow." He's like, "Did I grow more grass since you made the offer? Since you looked at the pictures online?" So I don't know what so. But I don't have enough context. Now I will say that that they're the Western North Carolina, up in the mountains where they've seen some of that flooding. I've had a handful of people that are involved in buying stuff, but really not a lot of activity. I think a lot of it's because there wasn't insurance. There's no money. There's no money to. Actually, there's a client of mine that he owns a business or manages a business, and he had a house in Irwin, and had sold a house on the coast so he could pay off this house. Completely lost it, right? And so there was no mortgage that he had to worry about having to pay on, but he lost the entire house. So probably a $400,000 place in Irwin that he's just starting all over. There's no flood insurance. There's nothing like that. So it's tough. It's tough. So
There was nothing from FEMA?
$60 a day for a month, maybe. I don't know. Very, 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 very little, right? So yeah. So I'm just kind of impressed because he just kind of shrugged it off. It's like, well, let's go make some more money. Let's go pay this one off, right? So, any mortgage challenges you guys are running into? Any weird stuff? Because I'm the king of weird stuff these days.
I'm dealing with FHA right now.
Okay.
And apparently they're super strict, more strict this year on manufactured houses.
Really? Okay.
And the skirting. There's cinder blocks underneath the house, right? It's already affixed, and he wants an entire 2x4 underneath the skirts.
The appraiser.
The appraiser.
That's on.
And
Oh, sorry. I forget that.
Should this guy be quiet and just rely on the structural engineer that he's going to bring in?
Yeah, absolutely. So if it's FHA, you're going to have to structural engineer. Structural engineer says that it is done in accordance with. Now there may be some cosmetic thing that they may talk about, but
the flashing's fine. There's a door that goes down. It has the door. And he messed up and errored the appraisal in the first place. It said all the appliances needed to be fixed and blah blah blah. So I'm talking to 2 of them, and he's like, "Well, this has to be done. It's about $2,000 to $5,000." And I'm like, "We close on the 19th, and this wasn't in the original appraisal." He's like, "Well, I would have come back anyways and addressed it after you told me that there was a door." I don't know.
Well, one of the things, so the hard thing with an FHA appraiser is that the appraisal stays with the house. Now, there's a way around that. What you'd have to, and it would be the same with anybody. If it were me internally, there would be no practical way for me to force another appraisal. Now, if he switched to a different lender and that lender said, well, there's an FHA appraisal, there's an FHA case number, but we would say, well, we would come up with some reason to say there was some material changes since that appraisal was done. Whatever material changes are, it could be, landscaping. It could be some repairs that were done. We'd have to identify those, and that would allow us to trigger to get a new appraisal.
Yeah, because the engineer said it was fine.
Exactly. So now there may be, so different, I don't know who this company is, but so what happens is we get internally what happens is the appraiser sends the appraisal to an appraisal management company. That's a third party between us and the appraiser. They look at it, and I'd say 90% of every appraisal that comes through, they say, well, it didn't meet our quality control standards. So we have to go back to them, have them fix some things. I don't know what those things are. And then it comes to them. Then they give it to us. We have, on our side, have an underwriter that reviews it, right? So it's, it should be done by the appraiser, but then it works its way up through the channel. So what I would, if this was mine, I would be talking to my appraisal underwriter to say, do you agree with what he's asking for? Because they're the smart ones, right? Okay. I'm going to say, I'm going to say, this doesn't make sense. We have a structural engineer that says it's fine. I mean, is this appraiser stepping outside of his boundaries? And they would say, yeah, we don't need that. So they're going to push back down to him and say, based on what you've given us, this is not necessary. Now, does that happen a lot? Not a lot, because by the time it gets there, it's gone through several hands and people have looked at it. So,
Yeah, I've never had it run into it before, so I was like, what's happening right now?
Now, if you'd like, if you wanted to, you or the borrower could send me the appraisal. I can run it up and say, look, if we had the same appraisal, what would we do? Right?
Well, it's not even on the appraisal. It's not even a subject to item. He said he wasn't going to add it until he came back.
Why is he coming back?
I don't know.
Was he re-inspecting? Because the first thing that he said was he wanted a solid surface foundation.
Nope. All it said was that there needs to be a door, but there already was one.
Oh, so he's going to come back and identify that there is a door, and then he's going to say, well, I'm here. I saw some other things.
Correct.
He's trying to rack up any inspection fees. What's he doing?
I don't know.
I mean,
I gotta call the lender back and be like, hey, dude, what's
Yeah.
happening? Because I can't go to my seller.
Yeah.
She's not going to do that.
yeah.
Just the crazy one.
Yeah. So, but I mean that would be my process if it was us. Is I would be saying, okay, yeah. But if again, I don't know that it makes any difference, but I mean the lender that you're working with should. I mean, obviously, I'm the advocate. I'm pushing. It's like, why is this? This doesn't make sense. Show me the chapter and verse that this is necessary, right?
The buyer's lender for
Yeah, the seller.
Mm-hmm. Okay, right. Right.
Try our guy because your guy's insane.
Yeah. So, that's tough. That's tough. So, sorry, but I mean, I'd be glad. Again, it's one of those things that if it came down to it, it's one of those things that I would. I mean, obviously, I'd love to have the deal, but if it's just messy because that loan officer should be the one pushing for that, unless it's like, the seller doesn't care because they want that done, right? And what incentive do they have to remove an improvement?
The quicker the better.
Yeah. So anyway.
I didn't think that was a normal thing, so I'll
It
definitely
doesn't-
go to the lender and be like,
Yeah.
what do we need
Yeah.
to do to
Yeah.
expedite this?
Yeah. So the thing I have learned in the years of doing this is that there's sometimes things that I just there's part of the story that maybe I just don't know. It's like if you said, and then it's issue B, it's like, oh yeah, now that changes everything. I don't know what that. I don't have enough contact. I don't have enough information.
Okay.
So I've tried to learn not to throw people under the bus. Oh, he's stupid, right? It's like, oh well, actually he's not stupid because there's all this other stuff going on, so that I didn't know about. So.
What about the terminology clear to close? So I know whenever we work with a local bank, they never say clear to close.
Really?
It was Dana, that one, that big, the one that works at
Yeah.
First American.
First Community.
yeah, First
Yeah.
They had like investor low on first. So we were like, cool, we clear to close, and she's like, we're approved. She had like a language with it, but
Okay.
apparently it was because they didn't kick it out to the secondary market.
Oh, right.
So clear to close was the underwriter saying yes, it's good to go.
Okay.
We had one that closed with First Horizon.
Mhm.
Like, we're clear to close. We're good to go. So Heather's like, cool.
Well, it could be maybe a commercial versus just a residential. No.
No, both residential. And they're like,
Really?
all right, go, clear to close. All right, cool, let's close.
Yeah.
In 2 days. And like, well, no, because we're clear to close, but he just signed the CD. So.
Right. Okay.
But I was like, oh, okay, I guess you can be clear to close, but then not have the CD signed.
That is correct. Yeah. So.
Because I was thinking, when they're clear to close, all this is done. We're
Right.
To close whenever.
Right. Okay.
I
So.
think that terminology is.
So clear to close for us means that the underwriter has done all their job and we don't need any additional documentation. Right now, things can change that. Right. If something comes up at the end, if somebody says, oh well, we found this, we need to change. I don't know what it would be. We don't have as much money as we thought we had. We had something happen. Well, now they may still be approved, but we have to go back to underwriting to say they want to go from putting 20% down to 10% down. They're still qualified, right? But we still have to go back to them to get, because there's been a material change. So the process for us, and I think for most folks, is that they don't have to happen the same way all the time. But clear to close means that we've run everything, and as far as we're concerned, all we need to do now is draw the docs. But there is a timing issue because we have to get the preliminary closing disclosure to the borrower 3 days in advance. So what we try to do is, once we get the title search, that's the trigger for us to be able to submit that preliminary closing disclosure. Sometimes it's confusing because we try to get it really early and the numbers are jacked, right? Just because they're, the intent of the law was that the borrower sees that closing disclosure so they can evaluate it and have 3 days and take the pressure off of them. What ends up in practical happens is that we get it to them as quick as we can, and the numbers are just not close. I mean, they're within a few $100s usually, but they're still, because we haven't balanced, we haven't said, well, the proration of taxes has been identified. We haven't, all this other stuff. Like we may or may not even have the final property tax, or no, it could be property tax, but homeowners insurance and all that stuff. So there's a lot of stuff that's outstanding. So the out of pocket could change. Yeah, so it and the daily interest for the day. So all that stuff has been estimated, and it's close, but it's not, because when we present to the borrower the preliminary closing disclosure, I have to emphasize it's preliminary because things will change because they want to go get their check, right, or wire the money and all that stuff, which is great. But in a situation like that, we'll generally tell them that let's figure out a number that's heavy, and let's wire that money, and then any overage, then you can get a check back. but yeah, there is a difference. So yeah. So 3 days. But and what happens? I mean, usually it's not a challenge, but what happens sometimes is that there's issues with title, and we got everything else ready, but waiting on title, and they're working on some issues, and we get the title work, and now it's like, okay, got it. Can we close tomorrow? It's like, okay, we got to get the title. We have to request the closing disclosure to be presented. They have to sign it. So we're pushing them, okay, we got it to you at 4:00. You need to e-sign it by the end of the day so we can mark it. Had one the other day that the seller, the borrower, they decided to, it was advantageous for them to wet sign a certain date on the closing disclosure. So we presented it to them, and they just wet signed it. So read into that however you'd like to read, because they wanted to close on Friday, and they didn't e-sign on the day they were supposed to. So anyway, but yeah, those things, even by law, like maybe a refinance, if you're doing a cash out refinance, there are times when you can get a petition to waive the 3-day right of rescission because there's an issue with, I need the money because, I don't know, need a heart transplant and I got to have the cash. I don't know what it would be that would be that urgent, but usually you got a 3-day right of rescission and then you get the money. But some of the things the government says, no, you can't. Even if you as the borrower said, I want to close in less than 3 days. No, sorry, can't. There's we can't do it. So anyway, is that helpful? A little bit? All right, cool. So I asked Mr. McCrory, so what are some topics that might be helpful? And the 3 things that he threw out was why interest rates are doing what they're doing, and what's a good strategy for buyers right now, and number 3, what's the cost of waiting? Is that what you said? So I have cost of waiting. Yeah. So I think the one that's really important right now is interest rates. So interest rates have moved down. They're feeling really good right now. I locked somebody. Now the refinance, for me anyway, refinance margins are lighter than they are for purchases. So, but I quoted somebody it was a 20-year refinance, with no points, and it was like 5 3/8. Right now, a lot of things going into that make that work, but that's pretty cool. So. But I quoted, I just locked one today that was, I think it was 6 1/8 and no points, right? So it just depends, right? There's a lot of different factors going into that. But, well, for me, the margins are thinner, right? Because there's a lot more competition in the refi market, and the value. So the way I look at it is the refinances for me they're not a big money maker because most of them that I do are for past clients, and so I'm generally marking those down anyway. And one of the things that we run into is the servicers, the current servicers of these loans are pretty aggressive. So our margins have to be tighter to be able to compete with them. So if like right now, what would happen is if I was looking at doing a refinance, my current servicer would probably see that I had my credit pulled, and they would reach out to me and they would say, "Hey, we really want to keep you, so we're going to make you an offer that you can't refuse." So we've adjusted our pricing to reflect that, right? And from a practical standpoint, if the refinance doesn't go through, it's not a big deal, right? I'll do it with somebody else or whatever. But on a purchase, that's where we provide the most value. It's like, okay, you don't have an infinite amount of time to close this. This is important. We can get it done. So, but what I want to talk about interest rates is that everybody's like, okay, on the 17th, I think it's the 17th, the Fed's going to meet, and we're expecting to have interest rates drop. So a lot of people are saying, well, I'm going to wait till that time, and then rates will be better, and I can get a better rate. Well, so the fact is that the market has already baked in the expectations for what's going to happen. So right now we're at about 11-month low, right? We're in the low to mid 6% range is where we're at. And the Fed hasn't cut yet, but the market expects them to. So let's say, for example, I think the market's expecting the Fed to cut the rate by a quarter point. So there's no direct correlation between this, but it goes together. But so if the market thinks they're going to improve by a quarter, and they improve by a quarter, everybody's like, cool, we're good, right? This is what we thought. This is how. So there's probably going to be no fluctuations in rates and things like that. Now there are some things coming out like the revised down jobs by like 900,000. That's just incredible to me that the government. I mean, the statistically that they're that far off. I mean, it has been happening for years, but it's just crazy. But those types of things are going to push the rates down. But so let's say if they come in and the Fed lowers the rate by an eighth instead of a quarter, everybody says, well, they still lowered it. Well, the market says, whoa, this isn't what we expected. So they're going to react, and rates are going to go up. So the consumer out there might say, well, the rates went down, but rates went up? What do you mean? So it's the comparing what happens to what the expectations are, right? And I follow people and I listen to it. I mean, people will get the notes from this Fed meeting, and they'll look at the notes from this Fed meeting, and they'll parse the words. It's like, okay, these two words were different. Okay, what does that mean? Is it better or worse? Because they're so, it's like, it's instead of using the word favorable, they used the word, I don't know, something else, right? Everything else is the same. All the words are the same except for those. So they're going to say, well, what does he really mean when he says that? So, so I think in terms of people, the consumer understanding that, I think is going to be helpful. Yeah. So Barry Habib, he's the big guy. If you ever see him, he's the MBS Highway. He's a Habib. No, Barry. No. So anyway, he says the market is always trying to price in what will happen in the future. If the Fed doesn't meet those expectations, it causes a repricing. Same thing I said. So the bottom line is what the Fed does isn't as important as whether it meets, beats, or misses the expectation.
Step on our constitutional
That's
rights.
right. That's right. That's right. So.
Add that a little bit more.
So anyway, is that?
Hell yeah.
All right. So what's a good strategy? So a couple things. What I'm seeing now, I don't know. I mean, you all have your finger on the pulse of things, but the move-in ready homes that are in great shape are still really competitive, right?
Yes.
So it's the ones that need a little work or a little overpriced. Those are the ones that are sitting a little bit longer. Is that okay? Sellers are a little bit more flexible. Inventory's up, not overwhelming, but I think the days on market. I don't know. You guys probably know that off the top of your head. What are the days on market now?
Things really are.
Okay, and it's a hyper local market, so we could say downtown Johnson City versus Gray versus Jonesboro versus.
You mean the average?
Yeah, I guess the average.
I think the last time I looked, it was just at 9 days.
90 days? Okay.
Average in this area.
So,
Mountain City lost. Mountain City's
mhm. Right. Right. Okay.
What is this 2019?
It really did start over. Like, everybody that was running over from Boone and wherever has stopped. And then
You think the flooding had a lot to do with that?
I think so.
That's really when it.
Same with Irwin. I feel like Irwin went skirt, and then
Irwin.
finally kicking back out.
Yeah.
Last summer.
Yeah.
Yeah.
Hey,
100%.
a little nugget. The word on the street is that NFS is going to be bringing on a couple hundred people in the next 2 years. Inside, outside, happy all the time, all over the place. So, what? Lock them.
That's what's going on in Irwin.
I don't like whoever's there.
So,
But Mountain City too. I mean, it's just it's just a little bit
Yeah.
higher.
Yeah.
Because like Parkdale shut down and all that.
yeah. So, one of the things that I'm doing is, as agent, watch the math on your pre-approvals, because people, like if somebody's, hypothetically they're going to buy a $300,000 house now, and with rates improving 0.5%, now they've moved up by about $16,000, right? So you might find that somebody that's, maybe you can move them up a little bit to get a different property. So, like 300,000 at 7%, if the rates drop to 6.5%, they go to about a $316,000 purchase price. So, we're revisiting some old pre-approvals, maybe revive some cold leads, and then there's an opportunity. Again, I don't know if it'll really work this way, but it would seem to feel like that if the improvement, there's going to be a little bit of a lag on buyers coming into the market. So it feels like that if moving now and we're in the low 6s, maybe buy the rate down to the low 5s, you're going to be in a better position to do that than it would be wait for prices to go up. I don't know. What do you all think about that? Does that seem like I think it's a good thing to be using to say to clients, but I don't know if that is really something that you would expect to see. Would you expect if rates continue to go down and we're at a 5.99? I think the psychologically, if it starts with a 5, I think people are just think differently. But would you expect that there's going to be a little bit of a bump if in competition with buyers if we start to see something that starts with 5s? Do you agree?
Absolutely.
Yeah.
We're getting on the inventory now with it, but it's just the whole thing of affordability.
Right.
So now they're looking at like, okay, what's my monthly payment? Because the realistic, real life human in the area is monthly cost.
Yeah.
Sure, because the number's big and scary.
Yeah,
It's
yeah.
like somebody goes in to buy the new car and they're like, whoa.
Yeah.
The first thing the salesperson does is like, what's your monthly thing?
Yeah.
Because that's how we're being trained. We're being trained to that on everything. Right? Our Netflix,
A lot
or
of mortgage
whatever.
lenders say that, don't they? Do you ever say that? Like, what do you want your monthly?
Absolutely. I mean, and I feel like when I started doing that, talking about asking a client what their budget is, I felt like a lot of car dealers will do that because they're like, oh, we're going to manipulate the
Change it to be realistic. Because
Yeah.
there's always a cost to live.
Yeah.
You have a cost.
Yeah.
If you live in a parent's
Yeah.
basement,
Yeah.
you are having a cost of living there. It's just burdened by your parents.
Yeah.
So if you are existing somewhere else, you're either giving it to the apartment complex or land or the landlord or whatever. You're
Yeah.
giving it to the house, but it's still in. Okay, great. I make X amount of dollars per month. How much is the PI? The pity.
Pity, yeah.
Right? How much is that?
I pity the fool. Pity the fool.
That
Yeah.
way I know what I can do.
Yeah.
But that is what's really going
Yeah.
to go from, it was going to be, that $300,000 price point was $1,850. Now it's $1,250.
Yeah.
Dude, I can do $1,250.
Yeah. Yeah.
Look at that free money now, or whatever.
Well, it's funny you say it because I had a client call in. They were referred to me by a credit union because of their income was variable, and they were like, this place came on the market. I looked at his credit report, and I could see that he had a jewelry card. So I said, and he said when we were playing bingo in the office, is he engaged? Is he? So, and then I'm talking to him. He says, my fiance, and I was like, I got it. He's engaged, right? Because there's a $3,500 ring that from wherever. Anyway, so we start talking. He's like, I really want this house. It's $250. It's nice. It's been redone. And I because he kind of hit me sideways, I'm like, okay, I'm trying to figure out how to make this work. And I said, hold on. What are you comfortable with on a monthly payment? Right? And because even if I can push it up to make that happen, do you want it? And it ended up being, it was like $1,800. I don't remember all the details, but let's say he said, I'm comfortable with $1,500, and the number was $1,800. I said, no, if this is Friday at 5 o'clock and you want to make an offer this weekend, right? Now, I'm in if you want to do this, but you need to be thinking, does this make sense? He's like, no, I'm not comfortable with that. Okay, right? Doesn't mean you can't buy something. It just means that the pressure's off right now, right? Why am I going to stay late on a Friday night and I'm not feeling good, and all that stuff? And I'm like, no, I don't want you to think I don't want to do this, but I'm just saying let's cool the jets a little bit and let's work on working everything else out. So now we can say, well, maybe you're more comfortable 195, 180, something like that. And it's like, okay, that makes sense. So, but to answer your question, that I try to ask that up front. So, what is your budget? Because they'll say, oh, I want a $1,200 a month budget, and I'm looking at a $400,000 house. I'm like, I try not to do the judgment thing to go, but what happens a lot, sometimes people will say that, and then later on they're like, yeah, I can go higher. I just didn't want, I thought maybe,
I've had that. Some people just don't.
Yeah.
Like,
Yeah.
Folks we're working with, they keep coming back to me. I'm like, all right, I put you on a call. Because they're like, well, we want to build. I'm like, what are you comfortably with? Like, at the very end.
Oh, good to see you.
And it's like, my destiny.
Destiny? Is that his new name?
I call him Destino.
Destino. Destiny's Child? Destiny's Child?
Destiny.
Destiny.
I'm Destiny.
Destiny.
Call me Destiny from now on.
Destiny.
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 Yeah,
I don't. I miss.
In bed, Young Frankenstein, Gene Wilder.
No, I don't remember. All I remember is walk this way. That's the part I remember. Yeah, that's old.
Yeah, he's in bed. He's fighting on whether he doesn't want to be Frankenstein, or whatever. And they're like, it's Frankenstein. He's in bed and he's like, and he looks at the old picture of his grandfather who was Frankenstein. He's got the smile. You know what I'm talking about.
It's coming back a little bit. Sorry. Yeah. No extra charge for that, folks, on the internet. A castle. Castles are more expensive. Anyway,
What's his name?
I don't know. We were talking about.
Oh yeah, so when I build it,
Oh, yeah.
So I just went and said, okay, cool. So before we get to the land, because the land is X amount of dollars, the build's gonna be this amount of dollars for this type of style. It's more than what they want, but maybe we can live with it, blah blah blah. And then bring in the conversations. What are you comfortable with? Like, oh, I don't really want to go over, but like I would like to be about $1,900, $2,000 a month. And I was like, cool, not happening ever.
Right.
Yeah. What if we sell that? And I was like, just we'll talk here because I'm thinking you got to be okay with like 4K, 5K if you're like I want to build and have this beautiful thing. Unless you just have a ton of cash, just stockpiled plus the equity.
I saw.
People just don't know.
I had. So I'm doing a VA one-time close construction loan. Somebody comes to me and they go to local builder, great, well-known local builder, and they own their own land. They got about 5 acres. Beautiful mountain views and all that stuff. And so they said, well, look, we got a price of $530 to build a house. I'm like, okay. So I'm bopping along, and the appraiser calls and said, yeah, I'm having a little trouble with comps. I'm like, what do you mean? I mean, this has got to be straightforward. I mean, you got all kinds of room there. And I looked at the plans, 1,700 square foot house, right? Plus a garage, plus porches, plus all that stuff. 1,700 square feet for $530, just the build cost, right? And I'm like, oh my goodness, right? And that, so we should get the appraisal in now because, I mean, they got close to $200,000 worth of land. So you'd think it would be able to make it work,
You can use
but
that for like a down payment.
yeah. So in their case, so what? 535. That's just for the house. So then you got $200,000 worth of land on top of it for a 1,700 square foot house.
That's $315 square foot.
Yeah.
I tell people, I'm
Yeah.
like, it's probably like 285 to like
Goodness.
325.
Remember back in the day, $40 a square foot for, oh my goodness, 10 times less. That's crazy.
They're like, why are we on our bill? I'm like, do you have $800,000?
Well, now I will say that I've got another one right now that is they're doing a barn dominium with white construction.
Yeah.
Okay. Doing the interior build, the land was about 25. It might be closer to 40. I can't remember. They're all in under 330, right? You know?
Well,
How big
I'm
is the
surprised because
It's not huge. I mean, it's probably 1,500 square feet, right? Yeah. But, you know, for them, it's like, so it's they started out, they wanted to, and this is an FHA, 3.5% down, right? So, and, you know, I had the discussion with them that this is not going to work, right? You're welcome to do this, but it's going to end up being out of your price range because I'm like, but they ended up coming back. They ended up dropping to get the price where they wanted. They dropped the garage. They can do that later. But to have a new place with, I mean, not top of the line everything, right? But it's a structure and it's sitting on a little bit of land. So
Yeah, that's one of those quoted. Barndos are pretty cheap.
Yeah.
It's metal.
yeah, metal building with a build out on the inside. And so evidently, White's they build some specs, I think.
They do.
And then they also have this other. So they're like, well, we used to not do the interior build out.
Yeah, I
So-
didn't know
so
did
they're
interior
do.
build-out now.
So evidently they do it. Now it's cost plus, right? Cost plus 15 or 17, I'm not sure. And so what we have to do in a situation like that is we have to build in an additional 10% because things happen. So, but that's even built into all that. So I think it was around 330. So
But you can see some of those manufactured homes and condominiums, and the build out inside can be so
Oh, yeah.
over the top.
oh yeah,
That there could be one that has very little square footage, but
Mhm.
it's $207,000.
yeah. So
It has everything. It's so over the top. of
Yeah.
the build out.
Absolutely.
yeah. So, but there are options there, and that's one of the things that's been interesting is that we've been able to between that and manufactured homes, it's crazy. I can't see. I haven't done a double wide under 200,000, right? And who would have thought? I mean, wasn't 15 years ago? It was like, yeah, we don't want to touch those. They're kind of we don't do those, and and then what's the cost of waiting? So I was thinking about some notes about cost of waiting. Here's my notes about cost of waiting. The rates are already a little bit better, right? So, I mean, we kind of covered that in terms of the, if you wait, then, there may be a flood of other people come in, and would you, I'd rather buy the place for the $300,000 place now, and then I would buy the same house, 6 months or a year from now, that's $10,000 more, so. And so I put a couple things together. We don't have quite as many as we thought, but I thought this might be helpful. I don't know if and Karen can hand these out, but just some takeaways from today. And then I thought, well, if it were, you might want to do a social media post that kind of covering some of these things. So we got these are my notes, and then I thought, well, what are some things that could be talked about, turned into a social media post that might support that. So, excuse me. You need to get out there with social media posts. Oh, look at that. It's Tim's birthday. He gets a cookie. It looks just like a candle.
This is an unused.
I'm sure it is. Could you make sure that everybody maybe drop one of those in there? That'd be great. So that is, any questions?
No.
All right.
Thank you.
Oh, I forgot to ask. So who do you know that looking to buy, sell, or refinance? You, sir, you look like you might know somebody.
And ask-
Listen,
make-
you just give me
make
a
sure
minute.
and ask
Oh, yes.
people on Facebook.
Yes, who do you know that's looking to buy, sell, or refinance?
I